Keith wanted us to look at a Shell Midstream Partners, also listed in the US. And Keith, well done. The stock is oversold at the moment, which makes the probability of a bounce for higher levels more likely. But there's a little bit of a concern here. The stock can retrace even further despite it being oversold. So I would want to wait for these two averages within my stochastic to start to break upwards. I want to see that they are turning around, especially obviously the shorter moving average, which is this blue line. I needed to turn around to show me a little bit of a divergence and give me a hint that the buyers have come in to support the stock to higher levels. Now, Shell Midstream has clearly last week found strong support there around $18. And I can assume that the momentum to the top will continue as long as this trend line remains a support. Now, last week's candle is a bit of a spinning candle, and that tells me indecision. Yes, they supported it here at around 18.50, but it wasn't enough. It's not a turnaround candle. It's not a beautiful dragonfly candle or a morning star formation or some sort of indication that this stock is turnaround. Now, this week's candle is even lower than last week's candle, which tells me that they're not really sure that they want to take it to higher levels. And more importantly, this 40-week moving average, that red line in the sand, has changed into a resistance, and that implies pessimism. That tells me that the sellers wants to take the stock even lower and that there's not enough buyers to keep the share to higher levels and to keep the momentum to the top in place. Now, Keith, we can see that $21.74 is a strong resistance on Shell, and the share needs to change that level into a support to assume that it can reach for even higher levels. Now, obviously, the first resistance is that 40-week moving average, and then that level there around $21.70 needs to change into a support, and then we can see higher levels. Yes, it is oversold, so let's hope it finds support, continues to find support on this trend line, and then maybe hopefully a turnaround candle, and then you can enter into the position. If you want to nibble it on it and preempt it, you can do so. Make sure your position size is not too big, and your stop loss, I would make this 18 Rand 50, the low of last week's candle. I will make that my stop loss. Maybe just look at the average true range and make sure your stop loss is not too small. Footlocker. Todd wanted us to look at Footlocker, a sports shoe wear company also listed in the States. And how beautiful. Oversold at the moment on my stochastic. My two moving averages have broken upwards, which implies we can maybe see more momentum to the top. Last week's Harami candle and this week's belt-hold line candle implies that there's enough buyers that are keen to lift the stock to higher levels. But I've drawn in this trend line there, which is clearly a strong resistance. And if I project it, we can see that $40.72 is a strong resistance that needs to be overcome. But this week's candle and last week's candle confirms that the buyers are fierce and are serious to take the stock to higher levels. And obviously my indicators that is oversold is ideal to enter into a position. So this graph is looking beautiful at the moment. The warning on the table on Footlocker will only be when that level there around $33.54 or $32.92 changes into a resistance. As long as those levels remain a support, we can expect higher levels on Footlocker. And the ticker on Footlocker is FL. Macys, one of the biggest retailers in the States listed on the New York Stock Exchange, is looking like a possible buy opportunity. Why? It's nicely oversold on my stochastic indicator, and the shorter moving average has broken upwards through my longer moving average, which makes it the ideal place to enter into a position. Now, if I zoom back, we can see that Macys, back in July 2015, traded around $72, and now it's trading at around $14.91. Now, last week's candle, and I want to zoom it out for our viewers, might be a possible hammer candle. Long lower shadow and a real body, but the confirmation of the hammer would only be in the next candle. My next candle, which is still in the making, I will only know how that candle will close by Friday's close, needs to be a bullish engulfing or a possible turnaround candle. Some confirmation that there is bulls in place and there is buyers who wants to take the share to higher levels. Now, a hammer candle hits out, either prepares the stock for new highs or even starts to head and dig even deeper for lower levels. So this hammer candle is waiting possibly for the next candle to see what it needs to do and what the buyers and sellers really think about the stock. Now, the strong resistance there is waiting at $15.23. When Macys starts to consolidate above $15.23, that would be my confirmation that, hey, there's enough buyers to lift this stock to higher levels. When the stock starts to consolidate below 14 Rand, $14.70, I would assume that the momentum to the bottom will continue. What is nice is that my stop loss are very tight and is very small, which can easily make this a nice trade for short-term traders. I just want to see if there's maybe a window there. This is $21.03, and that high is $20.98. So there's a small window that is waiting there on Macys. That is a nice target for possible investors that wants to trade this stock. I think this is an opportunity. Well spotted, Trevor. I think this is a nice buy opportunity for investors to look at for the future. Ferrari. Craig wanted us to look at Ferrari, and he had two car shares. One was Ferrari and the other one was Tesla. So Craig, I'm sure that you are a automotive enthusiast. So at the moment, Ferrari, Craig, is caught within a rising channel. Now, a rising channel is a negative formation. So technically, when this lower band on Ferrari, waiting there at around $157.47, changes into a resistance on a weekly close, in other words, on a Friday close, this rising channel will imply negativity. It implies pessimism, and we can assume that it can go to lower levels. Now, we know that, okay, one, the stochastic is in no man's land. And yes, it has broken upwards, which implies that it can easily support this lower band even further. And we can see first higher levels before we see lower levels. Now, if this level there, if this lower band changes into a resistance waiting there at 157.70, where can it go? So the length of, or the width, excuse me, of the rising channel projected downwards from where it will be confirmed. So no matter where that might be, projected downwards is a possible target for the channel. Now that can take it back to $126.91. But more importantly, it will take it below the 40-week moving average, or it can take it to below the 40-week moving average, which is obviously will change the long-term sentiment towards Ferrari to the negative. Now, let's hope that the stock has found strong enough buyers here to lift it even higher levels, and it can maybe test it again there around 185. But we can see that the momentum to the top is in place. It needs to change this previous resistance, waiting there at $170.48. It needs to change that into a support before I can assume that we can see a new record high. So Craig, have a close look at this lower band. This is a weekly graph. So on a Friday close, make sure that it keeps it a support. If it starts to consolidate below it, I might consider taking a profit. Or let's hope that this stochastic implies upside first, and then wait to see that $170, $171 level changes into a support for more upside. Let's have a look at Tesla, the other automotive stock or electrical a company that manufactures electrical vehicles. Let's have a look at that for you, Craig. Now we can see, one, let's look at our stochastic indicator, which is the indicator that highlights overbought or oversold levels. Also the same story here. It's in no man's land. It's sitting here at a 47, which is not an ideal territory to either consider adding to the position or even taking profit. You want to do it when the indicator is stretched to a side, when it's in the corners. Now, at the moment, we can see that Tesla has found support there around $210. Now, we can assume that the momentum to the top will continue as long as that $210 remains a support. Now, interesting enough, this $210 where it found support is higher than the previous support that it found there around $185 there on the 28th of May and the week of the 3rd of June. So if this level remains a support and even go and we find enough buyers to lift it even higher, a higher low will be confirmed. Now, the previous resistance there was around $257, $257.90. So Tesla needs to find enough buyers to change that 257 into a support. But more importantly, look how close that is to the 40-week moving average. Again, Tesla needs to find enough buyers to lift it above that 40-week moving average in order for me to say that the long-term sentiment towards the share has changed to positive. Now we can see since about, let's start here on the January, in January 2017, when the stock changed the 40-week moving average into a support, it gave it a nice rally. But here, since the October 2017 up until Feb 2019, it's really been just consolidating around the 40-week moving average, not really trending to a side, either up or down. And that makes it sometimes very difficult and nerve-wracking to invest and trade the stock, because you want the share to be in the corners, either up or down, because it makes it so much easier to make a decision. But when it's hovering like this, it's sometimes very difficult to trade and have an opinion about a share. So 257, Craig, is your critical level. Above it, we can see higher levels. Keep an eye on that 40-week moving average that is waiting around $264.24 on Tesla. And this strong support at $210 should remain a support in order to continue to believe for higher levels on Tesla. Hope you enjoyed this week's show. See you soon. Have a fabulous week. Cheers.